on input tax credit. Input tax credit is one of the base of GST, because the cascading effect issue which is there prevalent as on date is going to be resolved by way of input tax credit availment and utilization under GST. Let us directly go towards the provisions. This is the presentation plan for the day. GST credits on input and input services as well as capital goods. Apportionment of credit and blocked credits. Availability of credit in certain special circumstances. Recovery of ITC and interest thereon. ITC in respect of job work. Manner of distribution of credit by input service distributor, and manner of recovery of excess credit distributor. This is something which we are going to understand today. It starts with section 16 and it ends with section 22. So we'll be discussing and touching upon each provision in detail, and I am sure that once we are done with this input tax credit, you all are going to be very happy, because you will be well versed about the provisions pertaining to input tax credit. Now, before moving ahead, let me announce one more thing, that from next session onwards, that I think the next scheduled session is on 1st of April 2017, which pertains to transition provisions. So what we are going to do now is we'll be discussing on the final bill that has been laid before the parliament yesterday, and by that time it is going to be cleared certainly by the Lok Sabha, and once it gets cleared by Lok Sabha, there are rare chances that there will be any changes. So we'll be dealing now, in spite of model law, today we are touching upon the model law only, but from next session we'll be dealing with the bills that will be approved by Lok Sabha. So before going into the deep provisions pertaining to section 16, which discusses about the credit pertaining to inputs, input services and capital goods, let us see few important examples and definitions under input tax credit. First is capital goods. We have discussed this earlier also. Capital goods is defined in a manner that the value that is capitalized in books of accounts of person claiming the credit and which are used or intended to be used in course or furtherance of business, that is capital goods. It means something or the value that is capitalized in the books of accounts and which is to be used in course or furtherance of business, that is capital goods under the GST regime. What is input? Input is any goods other than capital goods. That means something that is not capitalized in the books of accounts is input, and it is used or intended to be used by the supplier for or in the course or furtherance of business. Those inputs are to be used or intended to be used in course or furtherance of business. What is input service? Input service is any service which is used or intended to be used by the supplier in course or furtherance of business. Output tax. Output tax in relation to a taxable person means the CGST or SGST that is chargeable under the Act, even it includes IGST and UTGST now, on taxable supply of goods or services made by him or by his agent, and excludes the tax payable by him on reverse charge basis. So this is output tax, and the output tax you will have to calculate at the time of filing of GSTR3, that is the periodical return. And we have also discussed this concept while discussing the payment of tax concept, because we have seen that out of the electronic cash register you can pay anything that is your liability, that is tax, interest, penalty, any fine, anything that has to be paid by you. But in case of credit, that is electronic credit register, you can pay only the output tax liability, and this is output tax, which is CGST or SGST chargeable under this Act on the taxable supplies that you are making or your agent is making, and it excludes the tax payable under the reverse charge mechanism. What is outward supply? Outward supply in relation to a person means supply of goods and or services, whether by sale, transfer, barter, exchange, license, rental, lease or disposal or any other means, made or agreed to be made by such person in course of furtherance of business. Right? So this is outward supply. We have already seen the definition of supply. Definition of supply, section 3, subsection 1, clause A was more or less of similar nature. It was supply includes all forms of supply such as sale, transfer, barter, exchange, license, rental, lease or disposal by a person for a consideration in course or furtherance of business. So this is more or less a similar definition of outward supply. And then what is taxable supply? Taxable supply is a supply of goods and or services which is chargeable to tax under this act. And the charging section is section 8 of the GST law, model GST law. So taxable supply is something, a supply of goods and services which is chargeable to tax under this act. That is GST law. Now what is exempt supply? We have seen the definition of aggregate turnover earlier. Aggregate turnover means it includes taxable turnover, exempt turnover and export turnover. So taxable turnover we have seen. What is taxable supply? Now what is exempt supply? Exempt supply means supply of any goods or services which are not taxable under this act, and includes any supply of goods and or services which attracts nil rate or which may be exempt from tax under section 11. We have seen section 11 also in session 2, that was levy, collection and exemption. We have seen that the central government has the power to provide a general exemption or a special exemption. So that is the same thing. So exempt supply is, it is inclusive of supply of goods or services which are not taxable under the act, and such goods or services which attract either nil rate of duty or which may be exempt under section 11. That is exempt supply. And what is non-taxable supply? Non-taxable supply is a supply of goods or services which is not taxable, which is not chargeable to tax under this act. And then what is zero rated supply? Zero rated supply is something which is defined under section 16 of the IGST Act. We will be discussing that definition also. Input tax credit. What is the input tax credit? It is credit of input tax as defined in section 2, clause 56. And input tax in relation to a taxable person. It says IGST means includes and excludes. That means input tax means IGST including that on import of goods, CGST central goods and services tax, and SGST charge on any supply of goods or services to him. That is my inwards. Whatever is being charged to me as my inward, and I am paying that tax, whether that is IGST, SGST or CGST, that will be included in input tax. And it includes the tax payable under section 8.3, that is reverse charge. If anything I am paying under reverse charge, that again becomes part of my input tax and I am eligible to take credit of that, but it excludes the tax paid under section 9, which is under the composition levy. If I am covered under composition levy, then that is excluded. That is excluded from the definition of input tax. Now this is section 16 of IGST Act, zero rated supply. We have seen the definition. We have seen earlier that what is zero rated supply. It says that the supplies which are covered under section 16 of the IGST Act, and this says following taxable supply of goods and or services, export of goods and or services, or supply of goods and or services to a SEZ developer or an SEZ unit. These are the supplies which are zero rated supplies, and subject to provisions of subsection 3 of section 17. We are going to see it later today. Subject to provisions of subsection 3 of section 17 of CGST Act, which deals with apportionment and blockage of credit. Credit of input tax may be availed for making zero rated taxable supplies or zero rated supplies, even if that supply is an exempt supply. So that provision says that even if the supply is a zero rated supply, which is exempt supply, which is covered under the definition of exempt supply, but then also whatever input tax you are paying for that, whether it is input service, it will be allowed as a credit under GST. So a short or a brief can be that an exempt or any inputs or input services used for providing any exempt supply will not be eligible for credit, whereas for zero rated supplies the inputs or input services that are being utilized will certainly be available for credit. Now we are moving toward the core provisions of the law. ITC availment section 16, and it says who are the persons who are eligible to take credit. Person who is eligible to take credit are either a registered taxable person, and therefore a lot of questions were asked that I am a chartered accountant based at Gujarat, registered at Gujarat, I am going to Mumbai or some other state and providing services there, and for the provision of those services I am taking certain inputs also or input services also. So whether I will be eligible to take the credit or not? And the answer was no, because I am not registered in that particular state. So therefore the person who is eligible to take ITC, number 1, registered taxable person, section 16 of the CGST or SGST Act, and person making zero rated supplies that we have just now discussed, that a person who is making a zero rated supply is eligible to take input tax credit. And now who are the persons who are not eligible to take input tax credit? Number 1, non-registered taxable person. Certainly yes, a person who is not registered will not be eligible to take input tax credit. Number 2, a person having aggregate turnover below the threshold limit of 20 lakhs. If he is not having a threshold limit or an aggregate turnover crossing the threshold limit, he will not be eligible to take ITC because he is not supposed to take registration. But in case he takes voluntary registration, then yes, from the date on which he is granted the registration, he can take the credits, certainly. Supplier under the composition scheme, he is not allowed to take ITC. Supplier exclusively engaged in making exempt or non-taxable supplies, again, since there is no liability of taxation, he will not be eligible to take any ITC. There is only exception to this, and that exception is zero rated supplies. Agriculturist, since the agriculturists are not covered, they will not be eligible to take ITC. And last, government or any local authority making supplies which are specified in Schedule 4 of Model GST law. This also we have touched upon at the discussion of term supply and the schedules, Schedule 1 to 4. Schedule 4 prescribes those transactions which are entered into or taken or done by a state government, central government or local authority, which are those services which are made mandatory for them, like issuance of passport, issuance of visa, issuance of birth certificate, issuance of death certificate. So all those services are not taxable under GST. That is excluded from the term supply, and since it is not a supply, those services or the government or local authority which are making those supplies will not be eligible to take input tax credit. So this is about the eligibility, who are eligible and who are not. And now let us see how and in what manner the ITC, that is input tax credit, can be availed. It simply says every registered taxable person, subject to certain conditions and restrictions as may be prescribed, the rules are still to come, and within the time and manner specified in section 44, entitled to take ITC admissible to him, said amount to be credited to electronic credit ledger of such person. We have already seen the electronic credit ledger and the format of it. Whatever you are eligible for credit, you will be entitled to take that ITC which is admissible to you within the time limit and manner as may be prescribed, and subject to certain conditions and restrictions as may be prescribed, provided you are a registered taxable person and such amount that you are availing or taking as a credit will be reflected as a credit in your electronic credit ledger. There is an exception to this which says that for pipelines and telecommunication tower which is fixed to earth by foundation or structural support. For pipelines and telecommunication tower, now let me appraise you with one thing, that in case of final bill which is laid before the parliament, for pipelines which is outside your factory, the credit is not allowed. There may be situations that you will have to develop those pipelines outside your factory, but since it is outside your factory, it will not be allowed as a credit to you. Anyways, we'll be discussing that also in the extra sessions, but for the time being it says that for pipelines and telecommunication tower fixed to earth by foundation or structural support, including the foundation and structural support thereto, shall not exceed 1/3 in the same year, 1/3 in next year, and 1/3 in the subsequent year. It means within 3 years you will be eligible to take credit of pipelines and telecommunication power towers which are fixed to earth by foundation or any structural support. In those situations, in these two situations, the credit will not be allowed 100% in the same year. Other than that, whether it is input service or capital goods, 100% credit will be allowed to you in the same year, except these two. And in these two situations, 1/3 in first year, 1/3 in second year, and 1/3 in third year. It means in 3 years you will be eligible to get the credit for pipelines and telecommunication tower which is fixed to earth by way of any structural or foundational support. Moving ahead, what are the conditions for availing ITC? This is very important. Although directly or indirectly we have touched upon these conditions many a times, but let us see what actual conditions are prescribed. Number 1, registered person shall not be entitled to take credit of any input tax in respect of any supply of goods and or services to him unless, number 1, he is in possession of a valid tax invoice or a debit note or such other tax paying document as may be prescribed issued by the supplier registered under the Act. If he does not possess any of these documents, he will not be eligible to take credit. Next is receipt of goods and or services. We have touched upon this even in today's session when we were discussing about the examples. We have touched upon this, that or other questions that Mr. Harish Chandwani has asked. We have touched upon this, that even if in case of bill to and ship to, it will be presumed that he has received the goods, and since the words deemed received is written, 110% the person who is billing or to whom the billing is being done will be eligible to take ITC because he is satisfying this condition. Can ITC be claimed on tax paid or advance? Certainly not. Certainly not. We have done the time of supply. In time of supply we have seen 3 dates: date of issuance of invoice by the supplier, last date on which the invoice is supposed to be issued, and the date on which you are receiving the payment. And therefore we have considered and concluded that even if you are receiving payment against supply of any goods or services, you will be taxable, you will have to pay tax on that, but that tax will not be allowed as a credit because you are not satisfying the second condition. You have not received the goods or services, it's merely an advance payment. Moving further, payment of tax charged in respect of such supply to credit of appropriate government. It means the person from whom you have received the goods or services and to whom you have paid the tax must have paid that tax to the appropriate government, whether in cash or utilize the ITC admissible in respect of such supply. And not only this, furnished return under section 34, he must have furnished a valid return under section 34. Unless he does so, he will not be able, or we will not be able to get the credit. And what is a valid return? Valid return is not only filing the return within the time limit, it is filing a return with all the relevant details and the tax payments whether it is tax, whether it is fine, whether it is penalty, whether it is interest, whatever is there as on date, it has to be paid. Then and then only the return will be deemed to be a valid return. Otherwise, the other person will not be able to get the credit. Now, lastly, it says where the goods against an invoice are received in installments or lots, then in that situation, the input tax credit will be allowed when you are receiving the last installment, that is the final installment. Up till then, you will not be able to get the Senvet or ITC credit. So simply 4 conditions. Number 1, he is in possession of the valid documents. Number 2, he must have received the goods or services. Number 3, the payment has to be done by the person who is supplying those goods or services. And number 4, he must have paid, he must have filed, that is the supplier must have filed a valid tax return. Unless he satisfied all these 4 conditions, he will not be able to claim the ITC. Further to the condition, it says that where the recipient fails to pay the supplier of services within 3 months from the date of issuance of invoice by the supplier, following consequences follow. Still, the same provision is there in existing service tax. If you have received certain goods, you have made a payment, then it's okay. But if you have received, you have a tax invoice, you have claimed the credit, because you might get the eligibility, because number 1, you have the invoice, number 2, you have received the goods, number 3, the other person might have made the payment on the basis of time of supply, number 4, he might have filed a valid return. All those 4 conditions are satisfied and you are eligible to get the credit. But if you have taken that credit and within 3 months you have not paid, 3 months of the issuance of invoice by the supplier, you have not paid the supplier, then in that situation the amount of ITC credit taken on such services shall be added to recipient's output tax liability. It will be reversed, it will be added to your output tax liability, and the interest thereon will have to be discharged in the manner as will be prescribed, and you will be liable not only to reverse that, pay the tax, along with that you will have to pay the interest also. Now there is an explanation which has been inserted to section 16 subsection 2, which deals with the conditions for availing ITC, and that explanation is, for the purpose of receiving goods, it shall be deemed that the taxable person has received the goods where the goods are delivered by the supplier to a recipient or any other person on the direction of such taxable person, whether acting as an agent or otherwise, before or during movement of goods, either by way of transfer of documents or title to goods or services, to goods or otherwise. This is same that we have discussed in subsection 3 of section 7, that is place of supply, in case a third person, a person who is entering into a contract, who is known as third person in this situation, is instructing the supplier to supply the goods to some other person who is the actual recipient. And then there is a question in FAQs which clarifies that in bill to ship to scenario, ITC on goods will be available to person on whose order the goods are delivered to the third person. It's very clear in the FAQ also. Now moving further, subsection 3 of section 16, it says input tax credit will not be allowed to the registered taxable person on the tax component who has already claimed depreciation on the tax component of the cost of capital goods under the provision of Income Tax Act 1961. The same provision is as on day also in case of excise, in case of service tax. If you are purchasing any capital goods and the tax component is there, whether it is excise or some other tax component, and you are claiming the depreciation on that tax component, then you will not be eligible to take input tax credit. Subsection 4 of section 16 says a person shall not be entitled to take input tax credit in respect of any invoice or debit note for supply of goods or services after filing of return under section 34 for the month of September following the end of the financial year to which such invoice or invoice relating to such debit note pertains, or furnishing of the relevant annual return, whichever is earlier. This is very, very, very crucial point. Please be attentive for 2 minutes and please learn this concept. It says that if you are making a mistake in claiming input tax credit, then you have a time limit within which you will have to take credit. Obviously a time limit of 1 year is there, but you have to claim the credit at least, and that claiming of input tax credit is certainly for 1 year. But if you are missing out something, then there is a provision of solving or resolving that issue, and that provision says that you can resolve it on the basis of earliest of the two dates. Number one, the date of filing of return for the month of September, it means 20th October, or the date of filing of annual return. The last date is 31st December, but if you are filing that return on 20th of June or 19th of October, the adjustments for input tax credit can be made for the respective year only and only till 19th October. So it says either the date of filing of annual return or 20th October, whichever is earlier. You will have to follow this. You will have to keep this in mind, and whatever adjustments you are going to do in case of input tax credit, you will have to do within this time limit, which is either 20th October or date of filing of annual return, whichever is earlier. Now there is an example. I am sharing this example with you, and I will be waiting for the answers of this example from each one of you. You have to share the answer. What will be the number of days that will be allowed to you as per the earlier provision that we have read. This is subsection 4 of section 16, that is due date of filing of annual return or 20th October, whichever is earlier. Please answer to these examples. I am saying invoice dated 1st January 2018. Financial year is 31st March 2018, that is 1718. October 18 return, that is 20th October due date for filing return, and December 18 is the due date for filing annual return. So what are the number of days which are given to you for making any adjustments pertaining to this invoice which is dated 1st January 2018? Second is invoice dated 1st March 2018. Financial year is same, 1718. October return filing, you have filed the annual return. October return is there, you have filed the annual return on 25th of June 2018. And the due date for filing this is, and it says 20th October or date of filing of annual return, whichever is earlier. Now tell me how many days you are getting for making adjustments of invoice dated 1st March 2018. Then third example is the invoice dated is 1st April 2017, year is 1718, October due date of filing return is 20th October 2018, and annual return due date filing is 31st December 2018. Please calculate the number of days that you will be getting in all these three cases. And let us take a break of 10 minutes. Within 10 minutes we will be back. By that 10 minutes, I expect each one of you to be ready with the answers and share that with us, and then we will be seeing who has done it correctly. Thank you very much. Now I believe you all have done the exercise in the break. Anyways, since we are running short of time, I will not ask replies for each one of you. It was your responsibility, you might have shared that. Anyways, I will give the answers which as per me is the calculation. In first situation, I will be getting around 293, 294 days. You might have a gap of like 3 to 4 days, then it's okay. 290 to 295 days, there will be availability for us for adjustment in the invoice issued on 1st Jan 2018. On 1st March invoice, that is second case, I will be having 117 days approximately for making the adjustments. And for the 1st April 2017 invoice, I will be having 168 or around 170 days for making the adjustments. of invoice. So this is the difference. The only reason why I have taken this example is to clarify that subsection 4 of section 16 provides you that much of liberty. If the oldest invoice is there of the financial year, which is the relevant financial year, then you have more than even 550 days for making the amendment if you have not filed the annual return before 20th of October. So this is just a food for thought that how many days are available to you under GST for making an adjustment of input tax credit in any invoice. Now let me move forward because the time is very less and let us touch upon the provisions pertaining to apportionment of credit and the blocked credits. In the meanwhile, let me ask the organizer if there is anything, any comments or anything else that I need to address, except any queries. I think all have calculated the number of days and they have shared it, right? Now, apportionment of credit and blocked credit, section 17, which discusses and provides for restrictions and the situations wherein you will not be eligible to take the input tax credit. What are those situations? Let us understand and go through one by one. It says the goods and or services which are used for business purpose, then input tax attributable to that business purpose is allowable to you as per section 17 subsection 1. But in case it is used for any other purpose, then that portion is to be disallowed. That input tax attributable to other purpose will not be allowed. It means that if something is being used in the business as well as for some other purpose which is not pertaining to business purpose, then you will have to appropriate the credit, and whatever credit, to the extent it is applicable or it is not eligible because you are using it for other purposes than business or profession, then you will have to reverse that credit and that will become the output tax liability. Central government or state government may by notification prescribe the manner for attributing the credit. We will come to know about the rules on the basis of which we will calculate how to apportion or attribute the credit which is not related to business purpose. Now a question arises, does this provision apply to ITC related to capital goods? And the answer is no. Goods and or services. It says for taxable supplies and zero rated supplies, if you are using such goods or services, you will be allowed the credit. Input tax attributable to taxable supplies including zero rated supplies will be allowable, and the central government will prescribe the manner in which you will calculate the attributable amount for this purpose. And in case you are using those goods or services for exempt supplies, then it shall include supplies on which recipient is liable to pay under reverse charge. So in that situation, the ITC is not allowed in respect of input tax attributable to the exempt supply. The input tax credit will not be applied to that portion which is attributable to the exempt supplies. And this is how zero rated supply has been defined under section 2 clause 111, which is read with section 16. Export of goods and services, export or goods or service supplied to SEZ or developer or of SEZ. Zero rated supply does not include goods or services supplied to EOU. And again the question is, does this provision apply to ITC related to capital goods? No clarification as on date, but to my understanding, no. Subsection 3 of section 17, it says, or it is applicable for a banking or financial company including a NBFC. It says that a banking or a financial company including an NBFC which is engaged in supplying the services by way of accepting deposits, extending loans or advances, they will have an option, either of the two, for the purpose of claiming credit. They can exercise, they will have an option, either comply with the provisions of subsection 2 or avail of every month an equal amount or an amount equal to 50% of the eligible input tax credit on input capital goods and input services in that month. Either of the two, they have an option. I'm repeating it again. They shall have an option to either comply with the provisions of subsection 2. We have just gone through the provisions of subsection 2, which says that if something is attributable to zero rated and taxable supplies and a portion is attributable to exempt supplies, in that situation you will have to calculate the attributable amount in the manner as may be prescribed. And it says, in case of banking or financial company including NBFC, you have an option either to comply with the provisions of subsection 2 or avail of every month an amount which is equal to 50% of the eligible input tax credit as a credit. And once you exercise this option, you will have no looking back for that particular year. At least for that particular year, you will have to follow the same system, whether you are complying with subsection 2 or you are going for 50% of the eligible input tax credit. Now subsection 4 of section 17, this is again a very crucial and relevant section because it provides for restrictions on credits. In the situations which are mentioned in subsection 4 of section 17, the credit will not be allowed. I am repeating, the credit shall not be allowed in any circumstance. First is motor vehicle and other conveyance. As on date also the same restriction is there. If you are purchasing any motor vehicle, using it for the business of profession, in course of furtherance of business, then also the credit will not be allowed to you. There is one exception which has been provided under GST. If under any statutory obligation, I am repeating, if under any statutory obligation you are maintaining a motor vehicle, then only you will be eligible to take the credit. All motor vehicle and other conveyance except when they are used for making the following taxable supplies. In these situations you will be allowed to take the credit. Further supply of such vehicles or conveyance, it means I am taking certain input services of the similar kind and then I am providing the output service of the same kind or supply of the same kind, then I am allowed to take credit. Transportation of passengers or imparting training on driving, flying, navigating such vehicles or conveyance, and the transportation of goods. If the vehicle is being used for these purposes, then the credit is allowed, otherwise not. So one thing to be noted is, in case of those organizations which are using a motor vehicle for the purpose of carrying their employees, like BPO, आप दिल्ली में, गुड़गांव में, बॉम्बे में, बैंगलोर में जाएंगे, वहाँ पे BPO कंपनीज जो हैं वो अपने एम्प्लॉयज़ के लिए रात को ट्रैवल करने के लिए मोटर व्हीकल्स देती हैं. तो वेदर दैट विल बी अलाउड एज अ क्रेडिट टू यू और नॉट, इट्स अ बिग क्वेश्चन. लुकिंग prima facie to the provision, it's not allowed. Prima facie it should not be allowed, but technically and logically there are various case laws under the Senvet Credit Rules 2004 which says that it should be allowed. Now clause B of subsection 4 of section 17, specified supply of goods and or services. These again are on which the credit is restricted. Food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery. All these are consumables, and since these are consumables, these are getting consumed as soon as you are using it, the credit will not be allowed, except where such said category of inward supply of goods or services are used for making an outward supply of goods or service of the same category. If you are using that as an inward and then providing as an outward, you have purchased from somewhere certain goods and then you are providing the same goods as outward supply, then it is allowed. then the credit will be allowed, otherwise not. Then membership of a club, health and fitness center. In no circumstance this credit is going to be allowed. It's not allowed at all. Rent a cab, life insurance, health insurance. In all these three situations, except where the government notifies that the service which are obligatory for an employer to provide to its employees, you will not be allowed to take the credit. Rent a cab, life insurance, health insurance, you will not be eligible to take credit unless it has been notified by the government that you will have to follow this, and it becomes an obligation for you as an employer to provide this to your employees. So now in my example, if you are renting a cab for your employees, you are running a BPO organization, then in that situation, if the government has mandated that you will have to provide the cab services to your employees, being an employer, it's an obligation on you, then the credit is allowed. Otherwise, no credit will be allowed. Travel benefits extended to employees on vacation such as leave or home travel concession, the credit will not be allowed. Next is works contract service, subsection 4, clause C. When supplied for construction of immovable property other than plant and machinery, except where it is an input service for further supply of works contract service. So if you are providing a works contract service and you are taking some other person's works contract service as an input supply, then in that situation you will be allowed the credit, otherwise no. Goods or services, clause D, subsection 4 of section 17. When it is received by a taxable person for construction of an immovable property of his own, even when used in course or furtherance of business. If I am constructing any immovable property on my own, which is not plant and machinery, then even if I am using that for my business, then also it will not be allowed as a credit. The same restriction is there. All those restrictions we have discussed up till now are there in the current Senvet credit rules also, and this is affecting the factory building. If I am constructing the factory building on my own, then I am not eligible to get the credit of the same, because it's not a plant and machinery. Now construction includes, the term construction includes reconstruction, renovation, addition, alteration, repairs to the extent capitalization the said immovable property. And what is plant and machinery? It says apparatus, equipment, pipelines, machinery, telecommunication tower fixed to earth by foundation or structural support that are used for making outward supply, and includes such foundation and structural supports but excludes land, building or any other civil structure. So that will be falling under the definition of plant and machinery. So we are very clear now. Construction includes reconstruction, renovation, addition, alteration, repairs to the extent it is capitalized, and plant and machinery means any apparatus, equipment, pipeline, machinery, telecommunication tower which is fixed to earth by way of foundational or structural support. ITC, a works contract resulting into plant and machinery, is admissible whether ITC on works contract for completing and finishing services, repairs, maintenance, renovation or restoration in respect of immovable property are also excluded from ITC. The answer is no. Then further restrictions are goods and services tax paid under section 9 composition levy, not allowed. Used for personal consumption, not allowed. Goods which are lost, stolen, destroyed, written off or disposed of by way of gift or free samples, the credit on that not allowed. Any tax paid in terms of the following: tax not paid or short paid or erroneously refunded, or input tax credit wrongly availed by reason of fraud or any willful misstatement or suppression of fact. If you are adjudicated under section 67 of the model GST law, then whatever payment you are making, you will not be allowed to get the credit of that. If detention is there or release of goods and conveyance in transit, then certainly the credit is not allowed. Confiscation of goods or conveyance and levy of penalty, again the credit will not be allowed. Then central government and state government are eligible to issue a notification on the basis of recommendation of the GST Council, wherein they can prescribe the manner in which the credit referred to above may be attributed. So we have already discussed that where the credit referred to above, section 17 subsection 1 and section 17 subsection 2, wherein a same input or input service or capital goods is being used for both purposes, that is for business purpose as well as for any other purpose. So in those situations you will have to calculate as per subsection 5 of section 17 the amount attributable to the business purpose. Whether services like car insurance, repair and maintenance of cars availed for motor vehicles eligible for ITC. The question is for each one of you, whether the services like car insurance, repair and maintenance of cars, etc. availed for motor vehicles eligible for ITC. Because why I am asking this question, the reason is motor vehicle is not allowed as a credit. So whether these expenses like car insurance, repair and maintenance of such cars and the tax paid on that is eligible as input tax credit for each one of you, please answer this question. We will be taking up this question at the end of this session. Double whammy in case of supplies for private use, consumption to related parties. Whether assessee would be entitled to ITC on the following: pick up and drop facility for employees, food provided to the employees, medical or health kit for the employees, group insurance for employees, free services for employees, security expenses for staff quarter and insurance of staff quarter. These are certain expenses which an employer is doing on behalf of their employees. Whether these expenses are allowed as input tax credit, that is the tax component of these expenses are allowed as input tax credit or not. Please answer these questions. We will be taking up each one of these questions at the end of the session today. And this can be a summary which we have discussed up till now. Whatever we have discussed, this can be a summary of section 17. Wholly taxable supplies, yes, the credit is allowed to you. Wholly zero taxable, zero rated supplies, yes, it is allowed to you. Both taxable and zero rated supplies, yes, credit is allowed. Wholly non-taxable or exempt, no, credit is not allowed. Wholly for non-business purpose, no, the credit is not allowed. Both for business and non-business purpose, yes, proportionate credit is allowed. Section 17 subsection 5, the manner it has to be calculated and attributed. Both taxable and non-taxable supplies, again a proportionate credit is allowed. So this was section 17, which was pertaining to apportionment and blocked credits, wherein you had seen certain restrictions on availment and utilization of credit. Now we are moving towards availability of credit in special circumstances. There may be certain special circumstances in which you will be allowed to take the credit. Which are those special circumstances? Let us see them. Section 18 subsection 1, availability in special circumstances. Every registered taxable person who has applied for registration within 30 days from the date he becomes liable. This we have done in section 23, that when he becomes liable within 30 days, if he is making the application, he will be allowed to take the credit from the date he becomes liable to take the registration. Then, subject to certain conditions and restrictions, he will be entitled to take the input tax credit admissible to him in respect of input contained in semi-finished goods or finished goods held in stock on the date immediately preceding the day on which he becomes liable to take registration. This is we have already discussed that while discussing the registration part, section 23 and schedule 5 of the model GST law. It simply says, subsection 1 of section 18, any registered taxable person who takes the registration within 30 days from the date on which he becomes liable to take registration, he will be allowed to take input tax credit in respect of input contained in semi-finished goods and finished goods, and those credit he will be allowed to take which are available to him on the date immediately preceding the day on which he is becoming on which he is becoming liable to take registration. Subsection 2 of section 18 provides any person registered under section 23(3). It speaks about voluntary registration. When you are taking voluntary registration, then also you are eligible to take the credits, but those credits will be allowed to you from the date of grant of certificate of registration. That is the only difference. First, when you are taking the registration within 30 days, you are eligible to take credit whatever stock is there on the day on which you are becoming liable to take registration. And if you are taking registration voluntarily, then the date on which you are granted the registration of certificate of registration, on that date whatever credit is available in respect of input contained in semi-finished goods or finished goods, you will be eligible to take that credit. That is subsection 2 of section 18. Subsection 3 of section 18, it says that any registered person who ceases to pay tax under section 9, it means composition levy, then he shall, subject to certain conditions and restrictions as may be prescribed, entitled to take input tax credit admissible to him in respect of input contained in semi-finished goods or finished goods held in stock and on capital goods on the day immediately preceding the date on which he becomes liable to pay tax under section 8. It means the date on which he is coming out from the composition scheme, immediately preceding that day, whatever stock he was having, he is eligible to take input tax credit of that stock, entire stock, whether that is input contained in semi-finished goods, that is finished goods, or even capital goods. He will be eligible to take the credit of that. But in case of capital goods, he will have to take the proportionate credit. It shall be reduced by such percentage points as may be prescribed in this behalf. Because if there will be certain prescriptions on the basis of which he will be eligible to take credit of even capital goods that he was being utilizing while he was covered under composition scheme, and now he will be further utilizing when he is now out of the composition scheme. Subsection 4 of section 18, it provides for where an exempt supply of goods or services by a registered taxable person becomes a taxable supply. It means till date or till particular day you are engaged into those supplies which were exempt, but now it has been made taxable. So in that situation also, such person is eligible to take input tax credit admissible to him in respect of input held in stock, input contained in semi-finished goods, finished goods, and capital goods which are exclusively used for such exempt supply on the day immediately preceding the date when such supply becomes taxable. यानी जिस दिन वो टैक्सेबल हुआ उसके एक दिन पहले, उसके इमीडिएटली पहले वाले दिन जितना भी उसका स्टॉक है वो सारे स्टॉक का क्रेडिट उसको मिलेगा, उसको 100% वो क्रेडिट मिलेगा. कैपिटल गुड्स का क्रेडिट उसको प्रोपोर्शनेट बेसिस पे मिलेगा, जिसके लिए देयर विल बी रूल्स एंड रेगुलेशन विच विल बी कमिंग आउट इन द ड्यू कोर्स ऑफ टाइम. Subsection 5 of section 18, it provides that a taxable person shall not be entitled to take input tax credit under subsection 1, 2, 3 and 4 which we have discussed earlier in respect of any supply of goods or services to him after the expiry of 1 year from the date of issuance of tax invoice relating to such supply. It means अगर आपको एक साल पहले इनवॉइस कोई मिल गया है तो एक साल के अंदर अगर आपने क्रेडिट नहीं लिया then that credit is going to lapse. Within 1 year that credit has to be taken under subsection 1, 2, 3 and 4. It means अगर आपका पास कोई स्टॉक पड़ा है जो पहले एग्जाम था और आज वो टैक्सेबल हो गया और वो स्टॉक 2 साल पहले का पड़ा है या उसका इनवॉइस 1.5 साल पहले का है, तो भले ही वो स्टॉक पड़ा है लेकिन उसका क्रेडिट आपको नहीं मिलेगा. एज सिंपल एज दैट. Subsection 6 of section 18, it says where there is change in constitution of a registered taxable person on account of sale, merger, demerger, amalgamation, lease और transfer of the business. इन situations की वजह से अगर आपके constitution में कोई change होता है with the specific provision for transfer of liabilities, जहाँ पे liabilities भी आपकी specific provision से transfer हो रही हैं, then in that situation the said registered taxable person shall be allowed to transfer the input tax credit but remains unutilized in its books of accounts to such sold, merged, demerged, amalgamated, leased or transferred business in the manner prescribed. अगर आज मेरा किसी के साथ मर्जर हो जाता है और उस मर्जर की वजह से मेरा कॉन्स्टिट्यूशन जो है वो चेंज हो जाता है अपनी कंपनी का, देन इन दैट सिचुएशन जिसके साथ मेरे को मर्जर हुआ, आज की डेट में जिस दिन मर्जर हुआ उस दिन मेरे पास जो भी मेरा इनपुट टैक्स क्रेडिट का बैलेंस था, दैट एंटायर बैलेंस कैन बी ट्रांसफर्ड टू द डीमर्ज्ड और मर्ज्ड बिजनेस. जो नया कॉन्स्टिट्यूटेड बिजनेस है उसको वो ट्रांसफर हो जाएगा. दिस इज द प्रोविजन ऑफ सबसेक्शन 6 ऑफ सेक्शन 18. Subsection 7 of section 18, it says where a registered taxable person who has availed input tax credit switches over as a taxable person for paying tax under 9 section 9, it means एक नॉर्मल टैक्सेबल पर्सन था जो अभी कंपोजिशन लेवी में स्विच ओवर हो जाता है, where the goods and the services supplied by him becomes exempt absolutely under section 11, और या फिर वो टैक्सेबल सप्लाईज में था लेकिन अभी उसके गुड्स सेक्शन 11 की वजह से नॉन टैक्सेबल या एग्जेम्प्ट हो जाते हैं. देन इन दैट सिचुएशन जो भी उसने क्रेडिट्स लिए होंगे या जो भी उसके स्टॉक पे क्रेडिट था वो उसको रिवर्स करना पड़ेगा बाय वे ऑफ डेबिट इन द इलेक्ट्रॉनिक क्रेडिट और कैश लेजर इक्विवेलेंट टू द क्रेडिट ऑफ इनपुट टैक्स. ही विल हैव टू डेबिट, ही शैल पे एन अमाउंट बाय वे ऑफ डेबिट इन इलेक्ट्रॉनिक क्रेडिट और कैश लेजर इक्विवेलेंट टू द क्रेडिट ऑफ इनपुट टैक्स. कौन सा इनपुट टैक्स? In respect of input held in stock, input contained in semi-finished or finished goods held in stock, and on capital goods reduced by such percentage points as may be prescribed on the day immediately preceding the day on which such switchover, or as the case may be the date of such exemption. जिस दिन वो स्विच ओवर हुआ उस दिन के इमीडिएटली पहले वाले दिन पे जो स्टॉक था, या जिस दिन वो एग्जेम्प्ट हुआ उसके पहले जो भी स्टैक था उससे पर्टेनिंग जो भी आपका टैक्स लायबिलिटी इनपुट टैक्स का क्रेडिट था वो सारा का सारा आपको पेमेंट करना पड़ेगा बाय वे ऑफ डेबिटिंग टू योर इलेक्ट्रॉनिक क्रेडिट और कैश लेजर. वो आपको डेबिट करना पड़ेगा और उसके बाद कंप्लायंट होगा. और अगर पेमेंट होने के बाद आपके इनपुट टैक्स क्रेडिट में, बिकॉज अब तो आप एग्जेम्प्ट हो गए या आप कंपोजिशन लेवी में आ गए, तो अब आपके इलेक्ट्रॉनिक क्रेडिट लेजर में अगर कोई बैलेंस पड़ा है तो दैट बैलेंस विल lapse, and after payment of such amount the balance of input tax credit, if any, lying in his electronic credit ledger shall lapse. That balance will lapse automatically. Now 3 residuary sections. Subsection 8 of section 18, it says that the amount payable under subsection 7 which we have just now discussed shall be calculated in such manner as may be prescribed. Okay. The amount of credit under subsection 1, 2, 3 and 4 shall be calculated in the manner as may be prescribed. Fine. And subsection 10 says in case of supply of capital goods or plant and machinery on which ITC has been taken, the registered taxable person shall pay an amount equal to the ITC taken on the said capital goods or plant and machinery, reduced by the percentage points as may be specified in this behalf, or the tax on the transaction value of such capital goods or plant and machinery under subsection 1 of section 15, that is valuation, whichever is higher. अगर आप कैपिटल गुड्स या प्लांट एंड मशीनरी को सप्लाई कर देते हैं जिसपे आपने आईटीसी ले लिया है, तो वो सिचुएशन में आपको पेमेंट करना पड़ेगा. टैक्सेबल पर्सन विल हैव टू पे व्हाट ही हैज टू पे, अमाउंट इक्वल टू आईटीसी टेकन ऑन द सेड कैपिटल गुड्स और प्लांट एंड मशीनरी रिड्यूस बाय परसेंटेज पॉइंट्स. भाई उसने 10 साल की मशीनरी थी, 10 साल में से 5 साल यूज कर ली, 1 लाख रुपए का उसने क्रेडिट ले लिया था, तो अभी उसको या तो परसेंटेज पॉइंट्स में रिड्यूस करके 50,000 रुपये का क्रेडिट रिवर्स करके उसको भर दे, 50,000 रुपये का टैक्स भर दे, और द टैक्स ऑन ट्रांजेक्शन वैल्यू ऑफ सच कैपिटल गुड्स, या फिर वो जिस वैल्यू पे उसको ट्रांसफर कर रहा है उस वैल्यू पे टैक्सेबल गुड्स को उस वैल्यू पे वो टैक्स भर दे अंडर सबसेक्शन 1 ऑफ सेक्शन 15, जो ट्रांजेक्शन वैल्यू की बात कर रहा है, जो हम आगे कभी देखेंगे। विच एवर इज हायर, दोनों में से जो ज्यादा होगा, अगर उसका लेट से ट्रांजेक्शन वैल्यू 5,000 रुपये ही है और वैसे उसका जो परसेंटेज पॉइंट से रिड्यूस होकर क्रेडिट 50,000 रुपये आता है, तो ही विल हैव टू पे 50,000, विच एवर इज हायर हैज टू बी पेड। सो दिस वाज सेक्शन 18 which dealt with availability of credit in certain special circumstances. And the last proviso says, where the bricks, mold and dies, jigs and fixtures are supplied as scrap, the taxable person may pay tax on the transaction value of such goods under subsection 1 of section 15. वहाँ पे जो actual transaction value होगा वो उसके ऊपर टैक्स का पेमेंट कर सकते हैं। Now section 19 which discusses the recovery of input tax credit and interest thereon. It's a simple section. It says where the credit has been wrongly taken, जब भी आपने क्रेडिट गलत ले लिया, the same shall be recovered from the taxable person along with applicable interest. Whenever a credit has been wrongly taken by a person, it should be recovered from the taxable person on the basis of this provision and along with the applicable interest. Section 20, taking input tax credit in respect of input sent for job work. If you are sending as a principal certain inputs or capital goods for the purpose of job work, how you are eligible to take credit, that has been covered under this section, which is section 20. It says the principal shall be allowed to take the input tax credit on inputs sent to a job worker for job work. If you are sending as a principal any item or any input for the purpose of job work, then you are allowed to take input tax credit on that. And how the entitlement? You will be entitled to take credit of input tax on inputs even if the inputs are directly sent to the job worker. एक ऑप्शन क्या है कि पहले आपने वो इनपुट्स खरीदे और उसके बाद वो इनपुट्स आपने जॉब वर्कर के पास भेजे। दूसरा ऑप्शन क्या है कि आपने अपने पास इनपुट्स मंगाए नहीं और आपने डायरेक्ट जॉब वर्कर के पास भेज दिए। तो ही इज स्पीकिंग अबाउट दैट सेकंड प्रोविजन, इफ द इनपुट्स आर डायरेक्टली सेंट टू द जॉब वर्कर फॉर जॉब वर्क विदाउट देयर बीइंग फर्स्ट ब्रॉट टू हिज प्लेस ऑफ बिजनेस। इट मीन्स प्रिंसिपल मैन्युफैक्चरर के प्लेस पे वो ना लाए बिना ही उसने डायरेक्टली जॉब वर्कर को वेंडर्स के थ्रू ही डायरेक्टली वहां भिजवा दिया, तो भी आपको क्रेडिट मिलेगा। वेयर सच इनपुट्स आर विच आर सेंट फॉर जॉब वर्क नॉट रिसीव्ड विद इन 1 year, इट शैल बी डीम्ड दैट सच इनपुट्स हैज बीन सप्लाइड बाय द प्रिंसिपल ऑन द डे व्हेन दोज वर सेंट। इट मीन्स अगर प्रिंसिपल मैन्युफैक्चरर जो आपको जॉब वर्क के लिए जॉब वर्कर के पास गुड्स भेज रहा है या इनपुट्स भेज रहा है, अगर 1 year के अंदर जॉब वर्क होके उसके पास वापस आ जाता है देन इट्स ओके। लेकिन अगर वो नहीं आता तो इन दैट सिचुएशन इट विल बी प्रिज्यूम दैट इफ ही इज नॉट रिसीविंग दोज गुड्स बैक आफ्टर द जॉब वर्क डन विद इन 1 year फ्रॉम द डेट ऑन विच ही हैज सेंट दोज गुड्स, इन दैट सिचुएशन it will be presumed that those inputs have been supplied by the principal on the day when those were sent. It means उसको 1 साल का इंटरेस्ट भी भरना पड़ेगा और 1 साल पहले सप्लाई हो गई थी ये प्रिज्यूम कर लिया जाएगा और उससे टैक्स रिकवर किया जाएगा। और जो सेकंड सिचुएशन थी जहां पे डायरेक्ट जॉब वर्कर के पास गुड्स भेज दिए गए, उस सिचुएशन में 1 साल तब से कैलकुलेट करेंगे जब वो गुड्स जॉब वर्कर को मिले थे। द डेट ऑन विच द जॉब वर्कर हैज रिसीव्ड दोज गुड्स फॉर जॉब वर्क पर्पस, फ्रॉम दैट डे द पीरियड ऑफ 1 year हैज टू बी कैलकुलेटेड। मूविंग अहेड, सेम प्रोविजंस पर्टेनिंग टू कैपिटल गुड्स। पहले जो 3 सबसेक्शंस हमने देखे, सबसेक्शन 1, 2 और 3, इट वाज पर्टेनिंग टू इनपुट्स एंड नाउ इट इज पर्टेनिंग टू कैपिटल गुड्स। तो प्रिंसिपल विल बी अलाउड टू टेक इनपुट टैक्स क्रेडिट ऑन कैपिटल गुड्स विच आर सेंट टू अ जॉब वर्कर फॉर जॉब वर्क। Second is वही capital goods which can be directly sent to a job worker for job work without their being first brought into the place of business of the principal manufacturer। और थर्ड कि अगर वो 3 साल, वो पहले क्या था 1 year था, यहाँ 3 years है, अगर वो 3 साल के अंदर गुड्स कैपिटल गुड्स को प्रोसेस करके वापस भेज देता है देन इट्स ओके। अगर 3 साल में नहीं भेजता तो इट विल बी प्रिज्यूम कि जिस दिन उसने जॉब वर्क के लिए भेजा था एट दैट डे ओनली दोज गुड्स वर सप्लाइड। और इसका मतलब क्या हुआ इनडायरेक्टली कि आपको 3 साल का इंटरेस्ट के साथ पेमेंट करना पड़ेगा टैक्स का प्रिंसिपल मैन्युफैक्चरर को। एंड फर्दर इट सेज जो डायरेक्टली जॉब वर्कर के पास गया था कैपिटल गुड्स उसके 3 साल कैलकुलेट होंगे जिस दिन उसको वो कैपिटल गुड्स प्रोसेस होने के लिए मिला था उस दिन से। एंड लास्ट दैट इज सबसेक्शन 7 सेज period of 1 year or 3 years above shall not be applied to molds and dies, jigs and fixtures or tools sent out to a job worker for job work। अगर ये situations है molds और dies, jigs और fixtures और tools हैं which are sent by a principal manufacturer for the purpose of job work to the job worker, then the period of 1 year or 3 year above shall not be applicable। So these were the provisions pertaining to goods sent or input or capital goods sent for the purpose of job work to the job worker।